Welcome to our Savvy series. I'm Catherine Magana here with Rachel Ivanovich, and we're going to continue the conversation on Rachel's favorite topic, taxes. However, we're going to focus a little differently today. We're going to talk about tax planning for women in divorce. It seems like that's been a topic of conversation a lot over this last year or the last couple of years in particular.
It seems like during COVID, people decided they really like their spouse, or maybe they don't.
Yes, it's like we spent so much time together.
Well, and I've had a lot of conversations over the last, let's just say, especially the last year, about what are the things that I should know if I'm contemplating divorce or I'm going through a divorce.
It's interesting. We actually have a client we've worked with, and they are in the process of going through a divorce, and I think they were planning to have it done by the end of the year, and I don't know if they ended up getting that done after all, but there was some questions about when they were kind of divvying up their assets with, well, one wanted certain things and one didn't, and there's tax consequences depending on what they did with the money. And so you do need to look and talk with your, not only your divorce attorney, but also your tax advisor, because
and your financial advisor.
And financial advisor, because there's a lot of moving parts when it's not just, hey, I want to sell this, and then you take the tax hit.
Well, and there's so much emotion that goes along with it. And so if you find yourself in this situation, please feel free to reach out to us, 760-692-5700.
And so a lot of times the big conversation is, how are we going to divvy up the investments and the assets, and how about the house? So
yes,
the house is a big thing.
I want the house.
We had a client a few years back that she came to us after she went through divorce, and she wanted the home. She got the home. Well, she couldn't afford the home. And that's the problem, is that here you have this big, beautiful home, but the mortgage and the costs and the upkeep can be really expensive.
Or what if you need a new roof?
Yeah.
It's really expensive.
So she ended up eventually selling the property, and then she bought a smaller place and downsized. But we kind of wish we had talked before. So, obviously she could have made some of these decisions beforehand.
So the question I always get when it comes to the assets in the house in particular is, who gets to write off the mortgage interest or the property taxes? And so that's the discussion you really want to be having with your divorce attorney, and make sure that gets written into the contract. And especially that last year when you potentially are still living together and you'll be filing maybe separately. So you want to be really clear on who gets what.
Yeah. And then how about your filing status? How does that work?
So that definitely is one of the top questions I get when people are contemplating and or in the middle of a divorce, because people want to they say, well, we're separated, but we don't want to file together. So you have basically three options. So either you file a joint return, which I tell people often, the numbers might pencil out better for you if you file jointly. However, there are other considerations. So if you file a joint return in the final year when you're married, there's something called joint and several liability, which means if you file together and later you get audited, and or if you owe money when you file the tax return, and one of the spouses decides not to pay, both spouses are on the hook for the full balance. Wow. So you definitely want to make sure that you're contemplating, is the money going to get paid? And even if you have a refund that final year, if the IRS comes around later and you have an audit and you get assessed a new balance because of the audit, you're both on the hook for the money. So if one spouse says, I'm just not going to pay it, then you're on the hook for it. So it might be a better option to file separately. So that's the second option. So you have married filing joint, and then you have married filing separately.
So maybe as you're going through a divorce, it might start
making sense. It might make sense. And married filing separately typically is not a great filing status because a lot of credits aren't allowed. There are a lot of benefits. A lot of the thresholds are lower for married filing separately. But in the long run, it might make sense to take a little bit of a tax hit the year you get divorced and file separately, so that you don't have to later be bound to or have to call the spouse or have to call the attorney and get the attorney re-engaged in the situation. So your third option is if you have children or if you have a qualifying relative living with you, is you can file head of household. So people always want, they ask, what's head of household? I'm filing head of household. Well, you can't file head of household unless you have a qualifying child or a qualifying relative that lives with you, that's their primary home, and you pay more than half the cost of the upkeep of the home. So a lot of people also ask, well, we separated during the year, but we're still married. Can I file head of household? And you can. if you didn't live together with your spouse for the last 6 months of the year.
Okay.
So if you have two separate households, let's just say your spouse moves out or you move out, and you have two children, and let's just say one child lives more with you and the other child lives more with the spouse, you each could file a head of household, as long as even if the divorce isn't final. As long as you weren't living together and you had that home for a qualifying child or relative.
So let's talk a little bit about claiming children as dependents. So that's kind of a big topic, and is that
It's a
something?
huge topic.
I mean, is that something that's decided?
And it's a point of contention, and typically, and oftentimes it is written into the divorce decree who gets to claim which, and it kind of boils down to who is the custodial parent. And just a word of advice: make sure you're working with an advisor, because these tax laws change all the time. And when I started doing taxes, 25 years ago, what a qualifying child was 25 years ago is not the same thing now. And they've changed the rules, back and forth. And sometimes I even have to look up, because 25 years ago you could go head of household, the spouse could claim the kids, and you could still take credits. So there's some credits that actually go hand in hand with filing status and dependency. And so if you are the custodial parent, meaning your child spends more nights at your home than at the other spouse's home, you would have to release the exemption by filing Form 8332. And so that non-custodial parent has to attach that to their tax return in order to claim. Now reality, because that's textbook, if the one spouse claims the child first and files the return, and you go and they get it first, and then you basically have to fight them for it. So I've often seen divorcing couples where they're January 1st, they're on my doorstep. I am filing right now because they want to get, and you can fight them. I mean, you can write a letter to the IRS and say, I legally, here's my my divorce decree. I was supposed to be able to claim this child, but it does really get messy. So.
A lot of moving parts.
Work with an advisor.
So let's talk a little bit about investments. So if you have taxable investments or savings or 401ks or IRAs and things that are getting allocated to you. So once you start divvying up those assets, I think it's important to really look at, or if there's new money coming in from a sale of a home or something. But now at this point, once it's divvied up, it's now your money, and you really have to look at what's the purpose, how is it invested, because your style and the time frame, everything is now going to be a little different. So it's really taking kind of now looking at your financial and retirement plan and what's best for you and your situation, not how it was when you were married. So there might be some changes or updates that need to be made to the investment allocation and some conversations, and so it's definitely something that we can help, and we've helped our clients with, but it's not, hey, I divvied it up and it's just sitting there. It's the same, because things may change.
They have different goals. And I actually had a client conversation just yesterday morning. They got married, had joint investment accounts, had significant amount in these accounts, and now they're divorced. And so he was saying, well, who pays the tax on the because they just got their 1099s, wanted to know, okay, well, it's in our joint name and now we're divorced. Do I have to pay the tax on this? Does she have to pay the tax on this? And so we kind of went back to the the divorce decree and what was outlined in the decree, and what was the date of separation, and what was the value of the assets as of the date of the separation. And then, even though it was specified in the divorce decree, they didn't transfer and dissolve the joint account into two separate accounts until way later in the year. And so the market was great last year, and so there was a lot of taxable income. So he said, well, we separated in July. Do I have to pay, who's paying the tax on the money after that? And so we pulled the account statements up until the date the assets actually transferred, and they each are paying 50-50 on it. But I think each situation is different, but I mean, that's definitely a question we get.
There's a lot more to it than just, hey, I'm getting this investment.
I'm getting divorced, and let's split the assets.
Yeah. So it's really thinking ahead and kind of thinking about, if you're already, divorced, what's next. But if you're not divorced yet and you're going through that process, which, there's many of our female clients, our prospective clients that are going through that, is what should I be thinking about in the future? So hopefully today we shared a little bit of nuggets. There's a lot more to it for each particular client and that we work with, but we are happy to be a resource and help guide you as much as we can. If you're interested in a consultation or a phone call, you can reach us at 760-692-5700. And thank you for getting savvy with us today about your finances. And until next time, savvy up.
Please stay tuned for important regulatory disclosures.
Savvy Women Wealth Management is an SEC registered investment advisor. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry and how we may be able to assist. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. As always, please remember investing involves risk and possible loss of principal capital. Tax considerations presented may not be appropriate for every individual circumstance. A tax professional should be consulted before making any decisions about your tax liability.